Hello dear traders, you are watching Weekly Forex Outlook by Liteforex. Let's see which exciting trading opportunities await us in the upcoming days. The US dollar weakened last week a bit. It happened as the US Central Bank, the Federal Reserve, gave a cautious outlook at its latest meeting and pledged to be patient on further moves in interest rates. In the medium term and in the longer term, this is a negative thing for the USD because the central bank became more dovish than before. In addition, America released labor market data on Friday, non-farm payrolls or NFP, and the indicator came out better than expected. It was 304,000 versus the forecast of 165,000, and it reached 11-month high. However, other indicators disappointed. Wage growth in America slowed down from 0.4% to just 0.1%, and this is very negative for inflation and for the USD as well. Unemployment rate increased from 3.9% to 4%. So we can see that there are reasons to think that the current attempt of the USD to recover will be only temporary, and in the medium term it will remain under pressure. Let's check the economic calendar. To do that, we'll go to Liteforex.com, and here we will see which upcoming events will create new movements in the exchange rates of currency pairs. First of all, it's necessary to point out that China's financial markets will be closed during the entire week because of Lunar New Year holidays. Other Asian markets will be closed during some parts of the week. As a result, the amount of liquidity in the Forex market will be lower than usual, and this will likely lead to higher volatility and some big movements in currency pairs, so stay prepared. The market's risk sentiment is more positive than before. Traders are on the lookout for the news that trade tensions between the United States and China are easing, and actually there were some positive comments about that substantial progress has been made at the negotiations that took place last week. So that gave market some optimism. On Monday, there will be some comments of the Federal Reserve Bank of Cleveland President Loretta Mester. On Tuesday, there will be the meeting of the Reserve Bank of Australia. The central bank is not expected to change its key interest rate from the current level of 1.5%. Actually, the futures market is pricing in 50% chance that the RBA will cut the cash rate in 2019. Now the situation looks, of course, very uncertain. China's economic slowdown is affecting the Australian economy because China is one of Australia's main trading partners, and as a result, in its statement, the Reserve Bank of Australia may become more negative about the future prospects and acknowledge different economic risks which exist. So potentially there are some negative risks for the Australian currency from this event on Tuesday. Also on Tuesday, there will be the release of British Services PMI and US ISM non-manufacturing PMI, and US President Donald Trump will make State of the Union address in which he is expected to make a lot of comments about the recent shutdown of the US government, about the relations between Republicans and Democrats and potential progress about the wall between the United States and Mexico. So a lot of events and a lot of comments are expected from Trump, which will have an impact on the US dollar and on the market's risk sentiment in general. So that will be important on Tuesday. On Wednesday, there will be a speech of the RBA Governor Lowe, and it will be important for the Australian currency. What else can we say about the week? On Thursday, it will be an important day. There will be the speech of the Fed's President Powell, although we do not know whether it will contain comments about monetary policy. There will be employment data from New Zealand, and there will be the meeting of the Bank of England, the inflation report. It is not expected that the Bank of England will make any changes in its monetary policy. We know that uncertainty related to Brexit remains in the UK, and the risk of a Brexit without a trade deal with the European Union is still on the table. British Foreign Minister has said recently that the UK government would take a few days to formulate new proposals for the Irish border issue, and that extension of Brexit talks is possible beyond the end of March. So prolonged uncertainty remains, and the uncertainty will prevent the Bank of England from raising interest rates. So the event will likely be mildly negative for the British pound. On Friday, there will be a speech of the Fed's St. Louis Reserve Bank President James Bullard. Japan will release average cash earnings data, and there will be employment figures from Canada. So these are the main events of the week. We have two important central bank meetings. The meeting of the Reserve Bank of Australia and the Bank of England. Some comments from the Federal Reserve, and the fact that Asian markets are closed because of holidays. The main things to know about the upcoming week. As for the oil market, oil continues to watch how events unfold in Venezuela, where two people fight for leadership, and this fight is a risk for the country's oil supply, and so is making a positive impact on oil prices. Let's now see how all this is related to the actual charts and what are important levels for the main currency pairs. Euro dollar, once again, we have to speak about the same area of trading, because last week euro dollar took off from levels around 1.1390 and tested a resistance in the area of 1.15, but this level is a kind of psychologically important level for traders, and you can see that the pair failed to close the week at this high level. On the daily chart, we can see more details. We can see that indeed there is a lot of resistance around 1.15, and likely the euro will get hard time trying to get higher. So setbacks are very, very possible to the area of 1.1360, 1.1325. There won't be a lot of events from the euro area, so just the general risk sentiment, the events from the United States will be the main drivers of the pair's dynamics. We need to overcome levels around 1.15 to get a chance to to rise to 1.1590, and here will be another area of resistance. So these levels will likely act as a ceiling for the euro. The British pound, which reached some highs recently around 1.3225, didn't manage to stay at highs last week. We can see weekly moving averages here acting as resistance levels, and last week the British pound has descended lower. Now we can see that 200-day moving average is supporting the pound around 1.3040. Below that level there is the important psychological level of 1.30. The decline below these support levels will lead us to the previous resistance and now support in the area of 1.2950. Of course, the fact that here we can see the pound has formed a lower high creates a serious risk that the British pound will try to test support levels and make a deeper correction to the downside to the area of 1.2950, 1.29. This looks like the major scenario. To be able to continue the uptrend, the pound needs to get above resistance at 1.3155, and in this case it will gain an ability to retest highs at 1.3225 and to get towards 1.3385. Although this scenario doesn't look very plausible, and we think that it is time for British pound to test levels below the yellow line here. US dollar, Canadian dollar declined in line with the general weaker picture for the USD, growth in oil prices, which is helping Canadian currency, and the general more positive market sentiment. We can see that the pair closed below 200-day moving average, located at 1.3118, and below the 61.8% Fibonacci level. There is some support line around 1.3050. Below that level, we will target the next Fibonacci level at 78.6 at 1.2970. And all in all, if we look at the weekly chart, some 200-week moving average will provide some support at 1.3040. If there is the decline below that level, we can see that there is certainly more scope for lower levels in this currency pair. Resistance is located at 1.3180. A significant level is here, 1.32 as well. As for the dynamics of the USD versus the safe haven Japanese yen, we can see that American currency tested levels around 108.50 last week, but managed to close near the opening levels, forming this kind of candlestick with the long lower wick, which means that there is demand for the USD on the downside, and the pair is eager to test higher levels. We can see that resistance is at 110, 110.30, the 61.8% Fibonacci level. And despite the fact that moving averages are here in the negative setup, above 110.30, the currency pair will get a chance to test levels around 111.40 mark, where it will likely meet resistance in the area. So if you put upside targets, be conservative and think about this area as a take profit level. Australian dollar rose versus the USD during the most part of last week. Here we can see the bullish candlestick on the weekly chart. On the daily chart, we see that there was a strong impulse as the currency pair recovered from the area around 0.7090. Currently, the level of 0.73 is providing resistance. Here we find 200-day moving average, and this level prevented the Australian dollar from gaining much on Friday. However, retracements to 0.72 will likely find some support. The next support will be around 0.71 mark. So we think that the Australian dollar will continue trying to overcome resistance at 0.73. The next levels to watch will be at 0.7390 and 0.7460. The Reserve Bank of Australia's meeting on Tuesday will likely provide the lower levels for Australian dollar, but these lower levels may turn out to be a buying opportunity for this currency. The New Zealand dollar also progressed higher versus the USD, but made a negative candlestick on Friday. Currently, the pair is testing support at 0.6890, and decline below this level will lead us lower to test levels around 0.6850 and 0.6820 mark ahead of the main support and 0.68. Gold has reached 78.6% Fibonacci retracement, and naturally a correction is following. Support is at 1310, and the next target on the downside is 13 level 1300 for gold, where the price will likely find support. Finally, having a look at Brent, we here see on the daily chart something that strongly resembles the inverted head and shoulders pattern. However, a break above resistance at 63 and even better above 64 is needed to open the way up to the area of 68 mark. But given the situation in Venezuela, such turn of events is likely, so it is necessary to be on the constant lookout because a break higher is very likely in oil. This is all for today. Thank you for your attention. Visit Liteforex.com and trade with Liteforex.